gold prices pull back 10%. Is it time to go to new all-time highs, or are we going to even lower price targets? As you can see here, if we use the Fibonacci retracement from the top to the bottom of this movement, we already tagged the first level, which is the 0.86, and we are touching the second level, which is 0.618, right? At this point, we might go up, but the likelihood is to continue to go down further. Personally, I already told you guys how I would position myself from here. If I had no goal from the top, I would start buying. Like if I wanted to buy $1,000, I would put 200 at this level, at the 4,100 level, $200 in the 3,900 level, and 20% here as well, 3,750. 20% at 3,600, and the last 20% in the 3,400. We already touched two level, the 390. These were the high likelihood ones that we were gonna reach. And the next one is probably we are probably gonna go here eventually, but the way to position yourself is to just to be able to handle any kind of situation. Even if it doesn't go here, we will have like 40% of our position already acquired, right? So, but eventually, like this, after this such a high movement up, we should have like some kind of long consolidation. So eventually, it's very likely to hit the 3,000, at least the 3,750 level. Especially because we still have a high relative strength RSI. And if you can see, if you look at silver, we are also not touching the lower levels yet. So eventually, it's high likely we have a high likelihood to at least to revisit the 3,750 level, right? After that, the 3,600 level is it's just might not happen, but I will save 20% for here as well. You can, depending on your situation, you can choose a different percentages, but I wouldn't be like leaving everything to like being too greedy and leaving all your position to try to buy the lower low. And even I would even for the 3,400, you can leave like 10% or 20%. Here it's really like a strong support. You can see here we have been in this range for like half a year, and this is also where all the moves started. So this level should be quite a strong support, and this what I would expect to go if like the lowest right now. Yes, if you see like the monthly time frame, you can see there's still 3 days to close October, but if we close like this is like top and tail, and we might see some downside movement for a while. This movement have been so quick, so vertical, that it's just normal to have some kind of consolidation, at least even if you don't crash, of course. Or like it's just healthy consolidation, even if you want to move up to the upside afterwards, right? So that's pretty much my take right now. You can see we have a relative strength index of 90 still. So in the monthly channel, in the monthly time frame, this is really overbought right now. So it's just don't expect it to go up really like in the next few, maybe in the next 6 months we will see some consolidation, and it will just move sideways and just give us some buying opportunity likely. uh Now regarding to the stock market, the S&P 500, it's just trying to push through the channel. Still look dangerous. Let's see if we can actually push through. I would recommend to like have a relatively smaller position in the stock market right now, especially in the US stock market, because even if the S&P doesn't seem so like still seem to have like room to go up, so the Nasdaq is really in some dangerous territory, right? According to many uh, evaluations, like way to evaluate the stock market, like you can use the Warren Buffett index and every other index, and you can see it's like pretty much overvalued in most of the ways that we use. At least we used to value the stock market, right? And if you can see, like, even this is a metric of the stock market, S&P 500 divided by the global money supply, right? Global M2. Even you can see there's room for the S&P 500 to catch up the 2000.com bubble. We have still like a 30% upside run that we can go, and that's assuming that we don't print more money, right? Increase the M2, the global M2, because if we do that, we even have a bigger room to run. The Nasdaq is this is the same metric, the Nasdaq divided by the global M2. You can see the Nasdaq is really in bubble territory, right? So this is really dangerous. It could have some kind of crash, like 20% or something like that. It wouldn't surprise me, and it's really scary. You can also don't not have a crash and just have like a underperformance for 10-20 years of the Nasdaq. So yeah, I wouldn't be like overweighted Nasdaq right now, and that's how I position myself, right? Like I would say gold, especially like mainly gold, and then a little bit of S&P 500, a little bit of Bitcoin, like 20%, I would say 40% gold, maybe the double, and then some cash, 20% cash, something like that, just in case the market gives us some good buying opportunities, right? About Bitcoin, it's just so hard. Like this asset is so new, and the volatility is so high. Um, I I'm really not sure if we are going to go up or we are going to go down right now, but I am a buyer. I feel like it's undervalued. You know, the market can get crazy, especially in crypto, and Bitcoin, like linked to that. So we could have like a huge upside movement or a huge downside movement, but I think at this level is undervalued. So I will be a buyer if it goes down. And yeah, I mentioned I don't think, like in the previous videos, I don't think it will go lower than 60 or even 70,000. So yeah, I will be buying if it just dips like to 90,000, 80,000, even these levels. I will have some cash to be buying at this. If it goes lower than this, you know, if I had money, I would just add. But right now I'm planning that the 60,000 level is the lowest, right? I still think gold is like it's not nowhere near close to the all-time, like the bubble territory that we had in 1979. It's still at levels of 2011, so there's still like there's just it's less overvalued than the stock market, the US stock market at least. So I would definitely have more in my portfolio of the things that are less overvalued, right? And about Bitcoin, what is this? You can see like gold is going down these days, and Bitcoin is just going like sideways. But you can see we are still not even a tenth of the market of the gold, the market cap of gold, and even lower than silver, right? Many people say that the biggest run that the biggest assets that we should focus right now is silver, because the gold silver ratio have never been like higher. So eventually silver will catch up gold. But personally, I think like gold, Bitcoin and silver will go like uh kind of simultaneously, because these two assets are like usually the 1/10 of gold market, right? But you can also like balance your portfolio by taking part of your the the Bitcoin part to the silver part, or even from the gold allocation to the silver allocation. And I think that's pretty much it. Not much more. Let's see tomorrow what if there's any news changes, or this week is a really interesting week. But anyway, let's see how it goes. That's my take. See you guys next time.